Euro-US dollar has edged lower and dropped below the 1.32 line as US lawmakers have failed to reach an agreement on the fiscal cliff. Although talks between the Republicans and Democrats continue, the prospects of a last-minute breakthrough do not look good. The final U.S. release of 2012 looked sharp, as pending home sales jumped 1.7%, well above the forecast of a 0.3% decline. With the markets closed on Tuesday for the New Year's holiday, trading volumes remain thin. This has reduced liquidity and could result in increased volatility as we wind up 2012. There are no scheduled releases from the Eurozone or the US on Monday. Last-ditch efforts on the fiscal cliff continue. Both the Senate and House of Representatives convened on Sunday, but there was no apparent progress in the fiscal cliff talks between the Republicans and the Democrats. Unless a dramatic breakthrough is announced on Monday, the U.S. will go over the fiscal cliff, meaning that $600 billion in tax hikes and spending cuts will come into effect on January 1. This double jab could rock the fragile U.S. economy and stifle the recent economic recovery. Lawmakers on both sides have asked U.S. Vice President Joe Biden to lend a hand and try to break the impasse. Senate Majority Leader Harry Reid said he is hopeful but realistic, but it's doubtful if the markets are sharing his sentiment, with only hours left to reach an agreement to avert the fiscal cliff. The U.S. ends year with mixed data. Recent U.S. data typified what we saw throughout 2012, a mixed bag of strong and weak releases, making it difficult to put a finger on the direction of the U.S. economy. Unemployment claims looked sharp, but consumer confidence fell to a 5-month low. New home sales failed to meet the estimate, but pending home sales surprised the markets with a strong gain. Although there are signs that the U.S. economy is improving, this zigzagging makes it difficult to predict what to expect in early 2013. Italy faces elections. Italians will go to the polls in February 2013, as Italian Prime Minister Mario Monti announced his resignation. Italians will go to the polls early next year, and with the third-largest economy in the Eurozone in trouble, the political instability could hurt the high-flying euro. Monti has headed the government for just 13 months, but is widely credited for helping to keep the Italian economy above water during the difficult debt crisis. Monti waited for the 2013 government budget to pass before handing in his resignation. Political and financial leaders in Europe would like him to run in the upcoming elections, but in Italy the two main parties and a majority of Italians, unhappy with his austerity measures, have called upon Monti not to run. The markets will be busy monitoring developments in Italy, as the country continues to struggle with a weak economy and huge public debt. Eurozone struggling as year winds down. 2012 was a tough year for the Eurozone, with a debt crisis and a near Greece exit sending economic shockwaves throughout the continent. As we move into 2013, the health of the economies of the major players in the Eurozone does not look promising. Greece and Spain are struggling, even with bailout funds, and Italy and France are facing tough times as well. With these major economies facing small or even negative growth, there may not be a lot to cheer about in the early part of 2013. Germany, the economic locomotive of Europe, is in better shape, but is suffering from slower growth and higher unemployment. On the brighter side, there has